Hi, welcome to mywealth.com. I'm Mike Conlon. I'm one of the senior instructors with the courses. Welcome to today's blog. Today's blog is entitled The KISS Rally, and some of my other favorite Wall Street aphorisms I've picked up over the years. Okay, the idea of KISS, keep it simple, stupid. Okay, I admit that I am far too guilty of trying to figure out what's actually behind this market rally. When I sit back and I try and rationalize what it is that's making it move, I kind of scratch my head as it's not making much sense to me. After the brief pause we had last week and a little bit of a pullback, it appears that the bulls are back. Yesterday there was a nice big move on Monday showing that the bulls outnumbered the bears and that it looks like there's more strength back in the market. So what gives? What's actually making this market happen? Well, the short answer is darned if I know. I usually laugh when you turn on television and you see some sort of market pundit or, the CNBC, I like to call them the zoo crew, because they're usually a day late and $1 short. But whenever they sit there and they try and give you the reasons that the market's moving. Okay, back when I was younger and a little bit more of a wise guy, when people used to ask me, well, why is the market going up? I used to tell them, well, because there's more buyers than sellers, which is the truth. So usually and sometimes the market can be moving for reasons that are less complicated than people want to believe. Okay, and I'm not sure what it is about human nature that makes people want to actually, have to have the answer to why exactly things are happening. But sometimes it's just not necessary. Okay, I guess people sometimes think that the market's this some sort of secret society and only a few people know what's going on, and that if they could just kind of get that answer, that they'd be able to do better in the market. Well, let me let you in on the little secret. Okay, that's not what happens at all. Okay, what the market is a series of micro-elections where basically people vote with their wallets. Okay, people who decide they want to buy, they battle with people who decide they want to sell. At the end of the day, which way the market goes depends on who's got more people on their side. And the reasons behind their buying and selling doesn't really matter. Okay, at the end of the day, what matters is where the market's going. So let's take a look at the SPDR, the SPY, the ETF for the S&P 500 index, and the QQQQ, the ETF for the NASDAQ 100 index. Okay, let's take a look.
As always, be sure to check out the written blog at www.mywealth.com/blog. Okay, so what we're looking at here is a chart of the SPDR, the SPY, that's the ETF for the S&P 500 index. Okay, and what we're seeing here is that the bottom looks like it came in at roughly March 8th, March 9th, right around there. It was the low for the index. Okay, we can also see the same pattern here on the QQQ, which is the ETF for the NASDAQ 100. Okay, as we can see from the charts, there's been a pretty nice move up during that time. Okay, the market's always forward-looking, but to me the fundamentals just don't add up quite just yet. Okay, so what actually changed in the economy to make this rally happen? Well, basically, as I was thinking about it and was trying to figure out kind of what the fundamental differences were, it seemed like maybe what caused this move was more confidence in what's going on with the government and the administration going forward. And then this made me think back to some of the popular catchphrases I learned as I was growing up in the business. And as you're a young guy, you kind of like to throw these things around to make people believe you know what you're talking about. So let's take a look at a couple of them because I think they apply. Okay, one of the first things you learn is, as a trader, is to never fight the Fed. Okay, so far we've seen that the Federal Reserve and the administration is going to do just about anything to make sure that the economy is backstopped and that the market won't fall any further. Okay, they're going to do this whether or not it makes economic sense, and we're going to see how this plays out in the end. Okay, so the Fed has opened up the printing press and the money is flowing. So if you are somebody who believes that the economy is not doing well and believe that this is a good time to short the market, perhaps you want to get out of the way. It also looks like some of these folks have realized this and they've actually helped contribute to the rally with short covering. Okay, the second one is that markets can stay irrational longer than you can stay solvent. Okay, this is kind of similar to the first point, but basically what happens is a lot of traders, they think they're right about the market and the economy, and that the market is wrong. Okay, sometimes the need to be right outweighs the consequence of being wrong, and in this regard, you can lose a lot of money. So that's something to pay attention to. Okay, next, the trend is your friend. Okay, everybody's heard of this one. Basically, it just means you want to be on the right side of the market and trading with the trend. As we can see, since the V-bottom was formed, the indices have made a series of higher highs and lower lows. That's basically how we define an uptrend, and it's been supported nicely by the 20-day moving average. Okay, next, bulls make money, bears make money, and pigs get slaughtered. You've probably seen this on television. I know this is one of Jim Cramer's favorites. But it's important to be aware that when a sustained move like we're seeing in the market now takes place, and there's really no good fundamental reason for it, it's important to have good risk management strategy in place and to know when to get out should the market reverse. So it's really about risk management and taking profits, and it's telling you not to be greedy, just to kind of take what you're given. Okay, and lastly, famous rule, KISS. We say keep it simple, stupid. Don't try to outthink the market. Take what the market gives you. Okay, trying to figure out exactly why something's happening or why people are buying, why people are selling, it's really fool's folly. Okay, at the end of the day, when you see a market like this, it doesn't really matter. Okay, what you want to do when you see a trend established is try and find a low-risk entry, employ proper money management techniques, and get in and enjoy the ride. So don't wait. Get educated. Get in a course. Go to www.mywealth.com and learn about how you can, find out about some of these relationships and how they can benefit you.
So as we can see, sometimes when trading the markets, it's better to take a simple approach than a complex one. Okay, by dumbing down your approach, you could sometimes find yourself in profitable trades that you didn't even know existed. Okay, so to learn more about how to invest and trade the markets, go to www.mywealth.com. Check out our investing course. It's only $25. You'll have access to instructors like myself. You can ask as many questions as you'd like. Okay, so I'm Mike Conlon. Thanks for being with me, and I hope to see you in the courses.